Making me the host.
I can do, but I am streaming it live to YouTube. So I'm guessing if I make you host, the streaming might stop. Let me try. I'll make you the host.
Making me the host.
Yes. So I think we are live now.
I still can't see on the YouTube.
Yeah, I can see it. We are live. And we have 21 people currently on.
Uh, Looks like I have the wrong link then.
Just
Else
check
that.
the one that you have in the chat. I think it should work. Or just give it some time. I think it'll just have a buffer, but it should start up. It has a 20-second delay normally.
Okay, perfect. Yeah.
Did it start?
Yes.
Okay, perfect. So we'll just wait for a few minutes and then we can begin.
Sure.
Okay, so everyone, we'll just wait for 2 more minutes and then we will begin. We have a few people who are joining in. So yeah, just give us 2 minutes and we'll begin in 2 minutes. Yes, so we have a message from Anushri. Has the video started? Yeah, so the video started. We are just waiting for a few more people who are joining. And so we will begin in about 1 minute. Hi, Taha. So as I keep getting questions, I will just try to answer them in parallel. Okay, so I think we can start off, and we still have people joining in, but let's begin. So hello everyone. Good morning, good evening, depending on where you're from. We are live now. So just a quick background for those who don't know, this platform is hosted by the CanPR app. So it's basically a free app where you have different questions related to newcomers to Canada, or people who want to immigrate to Canada, or have anything related to immigration or settling, or any questions after you have landed, or citizenship. So if you haven't seen the app yet, you can just go to the App Store or the Play Store and download the app, and then we have a different WhatsApp groups where you could connect with people, like say for example, if you're landing in a particular city, we have different groups for that. If you're from a particular job category, like you're looking for jobs related to the medical field, to IT, etc. We have different groups for them, and we keep having bi-weekly sessions, or monthly sessions with different experts on different topics. So just turn on the notifications in the app, and you will be updated whenever there is a new session or any new update. So yeah, that's just the basics about CanPR. I will quickly pass it on to, let me see if I have any more questions. Just a second. Yep, everything seems good. I have a few more people jumping in to join. Okay, yeah. So let me begin. So I will quickly like to introduce our host for today, Monil Kapadia. So Monil is a designated CPA, CA, CFA, and CA with over 8 years of public accounting experience, and has worked extensively on tax and audit assignments with prestigious firms like Ernst & Young and PwC. So I'll pass it over to you, Monil, and we'll take it from there. Feel free to keep asking your questions on the chat. In case it's a longer question, you can open the CanPR app or the Eventbrite meeting, and we do have a form link where you can fill in your details. And if you have a longer question, or you'd like to get back to us later on with additional questions or more details on your question, you can feel free to fill in the form with your question, and we'll definitely get back to you on that. So yes, over to you, Monil.
Good morning, everybody. Thanks, Aman, for the brief introduction. So again, one of the most important thing when finances comes into picture is taxes, because no countries are, there are hardly few countries who are tax free, but in most of the countries you pay taxes. Now, again, the agenda for today's meeting is to walk you through what are the basics of tax systems. So if you are new, or you already immigrated into Canada and you wanted to understand more, we are going through various sequence of different tax laws and how to save the taxes, and we'll plan it accordingly. As Arman mentioned, if you have any questions, feel free to type it in the chat box, and we will try to address as many questions as possible during the session. Just to give again a brief introduction about myself, my name is Monil Kapadia. I'm a chartered accountant from India and CPA and CFA, and we're running the tax practice based in GTA in Toronto for more than 4 years now. And Heta Kapadia is my partner. So we are two people, two directors who are running the firm. So without wasting any further time, so let me jump on the very first slide. As a new immigrant, the very first question, or the most common question I get is, am I liable or obligated to file a tax return based on what circumstances or situation? Now, unlike other countries where the number of days comes into picture, where you have more than 183 days or less than 183 days, in Canada, it is more of a subjective nature. So it determines based on your significant ties versus soft landing. If you developed a significant ties, you are liable to file taxes in Canada, irrespective of when you landed in Canada. One question that comes to me is, if I landed for a couple of weeks and then went back, just test the waters, what happens then? In that case, you are not liable to file taxes in Canada because it was just a soft landing. You have not become a tax resident. But in case if you immigrated to the country and you started working here and you came with an intention of living here to for good and start earning and settling down in Canada, that is where it becomes a significant ties. And even if you came on the last day of the year, you are still obligated to file taxes, whether you have made any income or not. A typical tax year in Canada is a calendar year, 1st January till 31st December. So any income that you make during a calendar year, you file the taxes for that year and pay accordingly. The deadline to file taxes is 30th April of the next year. So any income you made from 1st January 2020 till 31st December 2020, you will file before 30th April of 2021. One most important question that comes to me, hey Monil, we came here in Canada and we have foreign property or we have some assets or foreign income. What happens to that? So in that case, if you have a property back home, then there are certain foreign asset disclosure requirements that you need to do. Any income you have earned before landing to Canada is totally tax-free. So you do not have to pay taxes on it. So say, for example, you landed on 1st of June 2020. Any income you made from January till June is totally tax-free. You do not pay taxes on that income. You still have to disclose that income because certain benefits are calculated based on your global income, but you don't pay taxes. But any global income after you landed in Canada is taxable. So say, for example, you landed in 1st of June, but you continued working for your home country before you landed, then in that case, your foreign income is taxable in Canada. If you have paid any taxes in that foreign country, then we apply foreign tax credits and then we get certain credits, but you will end up paying a little bit of taxes in Canada. This becomes your Canadian income based on foreign sources. Any money that you brought to Canada from the services or from the savings that you've done before landing is totally tax-free. You do not pay taxes for any money that you bring in Canada at the time of landing or even a couple of years after landing if you have disclosed it improperly while filing your tax returns. So this income you have already made before landing. So the Canadian tax system do not have a purview over that and this money will not be taxed. Now, when I said if any foreign property has to be disclosed, there is a threshold, which is 100,000 Canadian dollars. So at any point in time, the market value or the cost of that property when you landed is more than 100,000 Canadian dollars. You have to disclose that property when you file your first tax return. So whether it is, and when I say the $100,000, it is summation of your cash, bank, market value of the shares on the date of your landing, and the market value of the real estate that you're holding. So if the summation of all of this is exceeding $100,000, you have to disclose it to the government. Again, as I mentioned, this is not taxable, but any income that you generate on these assets after landing is taxable. So if you have fixed deposits or if you have a commercial property which is rented, then that interest or rental portion after you landed becomes taxable in Canada. If you're paying any taxes back home, you will get foreign tax credits for that. Once you land in Canada, and if you started working as a full-timer, the very first day of your job, you will get a form called TD1. This is the personal tax credit forms which your employer will need to get information about your name, SIN number, address, and all of those stuff. And then what are the credits you are generally eligible. So based on that, they will deduct the taxes and pay you net salary. Now, if you ask me, then normally my suggestion is you just fill up the first basic personal amount. Most of the time this is a pre-filled form which gives you the limit of 13,229. If it is not there, you just put that amount, leave everything else blank, and then sign and give it back. Because most of the credits may not be eligible. They are age amount or the caregiver or the disability or spousal benefits. Now, the reason I asked you to leave it blank is when we are filing your tax returns at the end of the year, and in case if you are eligible for any of these credits, we will apply that, and any excess taxes that your employer has deducted, we will get it as a refund. So you're not going to lose any amount. So we want to keep it as simple as possible for you. One question, obviously, you wanted to know the answer for how much taxes am I going to pay on what is the percentage. Now, as I mentioned, for 2020, the basic personal amount is 13,229. Every year, this amount increases based on the federal budgets and the inflation rate. For 2020, it is 13,229. So any income that you earn up till this amount is totally tax-free. You do not pay any taxes up to this amount. Any income that you earned after this amount is liable on a slab-wise manner. So more the higher the income, you jump the tax slabs and you pay accordingly. Now in Canada, there are two different tax systems or the slab systems. Federal has their own slabs and each province has their own slabs. So it is very difficult to provide you an exact percentage. So what I've done is based on Ontario province, I have clubbed the range of income and the average taxes that you will get into. So say, for example, if you are into a range of 50 to 70, on an average, you will end up paying around 24% in taxes. This is without considering any credits or RRSP or any kind of deductions. This is an average rate that you will pay. On an income of 100 to 120, you will end up paying around 29% in taxes. The highest tax slab is reached when you make more than $220,000. At $220,000, your tax slab is 53.5%. That's the marginal slab. So every dollar that you make, you are going to pay 53.5% to the government. That's the highest tax slab in Canada right now. When once you started the job, after a month, you will receive a pay stub or a pay slip for your gross and net salary. And there will be various deductions. And I wanted you to understand what are these deductions. So say, for example, you are offered a gross salary of $60,000 annual package, or on a monthly terms, it is $5,000 is what you are getting. There are few deductions that gets from your gross salary, which is federal taxes, provincial taxes. A CPP is a Canada pension plan, which is 5.25% of your gross pay, but maximum you pay $2,898. So a pension plan is a mandatory deduction that the government has levied from your salary. This deduction gets into a pool, and when you retire at the age of 71 or an early retirement at 65, based on the pool that has been created, you will start getting your retirement pension after you retire. Now, the rate is 5.25%, but maximum is this amount. So say, for example, if you're making $100,000 in gross salary, you will not be contributing $5,250, but you will, once you reach your maximum, you will not be contributing any more in that year. So 2,800 is the maximum that you will contribute per year. Similarly, employment insurance or EI is again a mandatory deduction of 1.58% of your gross salary to the maximum of $856. So an employee insurance is something that in case if you lose a job after doing some qualifying hours. Say, for example, in Ontario, it's somewhere around 650 hours. So if you worked for 650 hours and have contributed to EI, and if you lost the job, you got fired, then you can apply for unemployment benefits and you will start getting these credits from the government. Or you can go for maternity or paternity benefits, or there are some disability credits. So if you are contributing to EI, you will be able for all of those benefits. In case if you've gone for some health insurance premium, and these are the extended dental or extended life, if you applied for that, then those premiums will get deducted. RRSP contributions, if you're given a retirement savings plan, and we'll talk a little bit about RRSP in the coming slides. But if you're opted for those contributions, then that gets deducted, and the net salary is something that gets credited to your bank account. Once you have worked throughout the year, Jan to December, at the end of your year, you will get a pay slip or a pay, which is called a T4 slip, which is statement of remuneration paid. For those who know, who are from US, it is equivalent to W-2, or it is equivalent to Form 16 in India. So this summarizes your total gross salary that you earned during the year and how much taxes are deducted. And this slip is required by your accountant to file for your tax at the end of the year. So this gives information of your employee's name, the SIN number. The gross salary that you have made is in box 14. 22 shows your income tax deducted. Any employer's CPP contribution that you've done will come in box 16, EI contribution in box 18. So these are the 5 columns which are important, and this shows how much salary you made and how much deductions were made during the year. you will get the T4 slip from each of the employers. So say, for example, if you work for 3 different employers in a calendar year, you will get a T4 slip from each of this employer. Now, typically, you get a T4 slip in the month of February because each employer has a deadline to issue a T4 slip after the year end by 28th February. So for 2020, ideally, you should get this slip by 28th February of 2021. You will receive it either through mail in post, or your employer may provide you an online portal from which you can download it. But you will need a T4 slip to file for your tax returns. Now let's talk about some of the deductions against your salary. One is very first is the registered retirement savings plan. Now, RRSP is a wonderful tool that the government of Canada has given to save for your taxes and plan your retirement accordingly. Now, in case if you are contributing to an RRSP plan, say for example, you're contributing $10,000 each year, it creates a pool. And when you retire at the age of 71, you can start withdrawing from that plan and then pay for your bills during retirement when you do not have any other income. Now, the way the RRSP is built up is, say for example, you made $110,000 in gross income and you contributed $10,000 to RRSP plan. In that case, 110,000 minus 10,000 RRSP contribution. Now your net taxable income is $100,000 and you will only pay taxes on that $100,000. Now, please be sure that this is not a tax savings plan. This is a tax deferral plan. So the way it works is it's not going to save your $10,000 taxes on that 10,000 which you contributed, but it goes into the pool. And when you take out the money from that in future, then you will be paying taxes on that. So say, for example, you contributed for 3 years, $10,000 in our given example, and you created a pool of $30,000. Now, in the fourth year, you needed that funds and you took out the whole $30,000 in the fourth year. Then the total taxable income for you in the fourth year will be the $110,000 that you earned plus 30,000 from RRSP. So $140,000 becomes your taxable income, and you will end up paying more taxes because now your income is higher, and because of the slab system, you will pay higher taxes on it. So the idea behind this is you start contributing, and when you retire at the age of 71, you do not have any income. And when you have zero income and the only income you have is the old age security or the pension that you get from the government, and then you take out $30,000 for that year at the age of 71, then your total income is $30,000, which is into the lowest tax slab, and you pay less taxes than at that point in time. So you are splitting your higher income from today into the future years and to plan for your retirement and taking it out, and that is how the tax deferral works. Now, there is another plan called home buyers plan, under which you can take out RRSP without that amount getting added to your total income. Now, in the given example where we said $110,000 for 3 years, you contributed $10,000 for 3 years, and in the fourth year, now if you wanted to take out this amount under your home buyer plan, the home buyer plan says if you are buying your first house in Canada, you can take out money from RRSP without that being added to your income. So in the fourth year, say for example, you bought your house, your first house, and to pay for your down payment, you took out the $30,000. In that case, this $30,000 will not added to your taxable income. This is an incentive which the government has given so that you can buy your first house and save for that house. Now, the maximum you can contribute for the year 2020 is $35,000. Sorry, the maximum you can withdraw is $35,000 under home buyer plan per taxpayer. So between husband and wife, you can contribute and withdraw up to $70,000 without that getting added to your income. But there is a catch that you have to put this money back into the plan in the next 15 years. So when you took out the money under home buyer plan, you have next 15 years to put that money back into the RRSP. Otherwise, it will get added to your income. So a wonderful tool to understand the RRSP and take it out for the home buyer plan. Now, the only thing you need to make sure is the restriction, which is the you can contribute maximum for the room that you have. Now, in our given example, if you made $110,000, you cannot contribute the whole $110,000 in RRSP and say that your taxable income is zero. No, that's not possible. You get a room up to which you can maximum contribute each year. So say, for example, you landed in 2020 and you made $100,000, you get 18% of your previous year's earned income as your room that you can contribute in the next year. So in 2021, your room is equivalent to 18% of your last year's income of 100,000, which is $18,000. So you can contribute only $18,000 or the maximum $26,000. The lower of that is what you get as a room for to contribute for RRSP. So very important point for those who are new immigrants. If you have immigrated in 2020, you do not have any earned income in 2019, which is prior year, to calculate the RRSP. So your prior year income in from Canada is zero. So you do not have any room. Please be very careful. I see a lot of clients who starts contributing to RRSP in the very first year because your employer is also going to match and will give you some extra bonus. But please do not contribute if you do not have the room. In case if you are contributing, it is called over contribution and there is penalty from CRA. CRA will allow $2,000 of over contribution, but anything beyond $2,000, you will be penalized. So the room you can come to know when we file for your tax returns, you get a notice of assessment from the CRA, which will give you how much room you have. Now, in case if you're not contributed to that room for that particular year, you are not going to lose that room, but that room is going to be carry forwarded into the next year and gets accumulated so that you can contribute in the future years. A wonderful tool, a wonderful incentive to contribute for your retirement. Please make sure you know the terms, you talk to your accountant or a financial advisor before getting into it, and you can plan your taxes accordingly. Professional dues, if you are say for example, I'm a CPA and I pay for my annual dues on a renewal basis, the annual membership fees, I can deduct that against employment income. It need not have to be within Canada. If you are a PMP or if you're a chartered accountant or for having any designation outside Canada, and if you have to pay for your annual membership fees, then you can deduct that against your employment income. If the taxpayer or anybody in the family has a disability, then we get doctor's approval and certificate, and there are certain disability support deductions that you can claim. If you have contributed to a registered charity in Canada only, or a registered political party in Canada only, then you can get certain credits against these donations. If you're buying your first house, then you get certain credits called home buyer credits, which is up to $5,000. It gets converted into a tax refund of $750. So if you have bought your first house in Canada, please make sure you talk to your accountant to claim this credit. This is available only for once, and you can get the $750 credited to your tax when you file your tax returns. In case if both husband and wife are working full-time, and or they are studying full-time, and if your child is going to a daycare because of that reason, then you can claim daycare expenses up to $8,000 per child when we are filing for your tax return. So get a tax receipt from the daycare in which your child is going. If you're paid for your medical expenses, there are certain rules about it, but ideally about $2,300 if you're paid medical expenses from your pocket and this didn't got reimbursed from your insurance or employer, then you can get certain credits out of it. In case if you're studying full-time or if your spouse is studying full-time, then they can get a tuition fee certificate called T2202A from a college or university, and then can claim credits based on that. Now, in case if you're taken any loans from a financial institution in Canada, then you can, and if you're paid interest on it, then you can get the benefits, but this has to be, the financial institution has to be in Canada. One more expense is moving expense. Now, if you have already landed in Canada And if you're moving from one province to another or from one location within the same province to another location, because you got a job and you wanted to go closer to that job, then you can claim certain moving expenses. There are certain rules about it, but you need to make sure if you are spending for movers and packers and any kind of lodging, boarding, or food that you have eaten outside during the moving, then you can claim that. If you're moving for the first time from outside Canada to Canada, then that is not expensible. So you cannot expense that out. But once you land in Canada and you got offer letter in your hand and you're moved because of that offer letter to get closer to the job, then only you can claim that moving expenses. Um, as you know, the COVID-19 is around and most of you are working from home. So one of the frequent asked question is, hey Monil, how do we claim home office expenses because now we are working from home? There are two different methods that government has allowed, especially for 2020 because of the COVID-19 situation. One is government has given a federal credit of maximum $400 or $2 per day for which you work from home. For this, you do not need any approvals from your employer or any certificates for that. In case if you're working from home and you do not have any approvals from your employer or the certificates, then you can claim $2 per day, maximum $400 per year as the deduction against your employment income. In case if your employer's policy is to give you a form called T2200, or there is a simplified form that government has introduced, T2200S. If your employer is able to give you this form, then you can claim a little bit more than this based on your actual expenses. Now, in case if you have this form, your home office will consist of your rent if you're renting. In case if you are commissioned, then property taxes, all your utilities and internet, the maintenance or repairs if you have paid any, and any kind of supplies that you have spent. You can claim, sum up all of this for the full year. This becomes your home office, and you have to calculate a percentage of office, and then that becomes your claimable amount. So say, for example, if you're paid in total $2,000 a month in all your utilities and rent and other maintenance, then for full year, it is $24,000. Now, the way it works is you have to determine what is your dedicated office space. So say, for example, if you're living in a space called 2+den, there is 2 bedroom and there's a small den area, which you have converted into a dedicated office. Now, this office becomes your home office. So the way it works is you have to calculate the space of the den. So say, for example, the space of the den is 200 square feet and the total space of your house is 1,000 square feet. Then 200 divided by 1,000, which is 20%. So 20% of total home office expenses can be claimable expense. Now, in our given example, if we had $24,000, of which 20% sums to around $4,800 is what you can claim as home office expenses. Now, you make sure to go for this a detailed method, you need to have a signed form from your employer. What you cannot claim, obviously, if you're owning a house, then EMI or interest paid on mortgage, any kind of furniture that you bought or capital expenses is something you cannot claim. Now, in case if you are a commission employed and you are working into sales and you have to travel for your job, then you can claim travel expenses also if that is allowed under the form T2200 by your employer. Then you are allowed to claim vehicle expenses or the travel expenses, telephone expenses, and there are some other expenses based on that form. So get that form and your accountant will be able to help you to understand, to explain you which expenses can be claimed and take the benefit of it. One question that comes to me again, do we file taxes even if we don't have income? And, if I would say, yes, it is required. Say for example, you landed on the last day of your tax year. In our case, if you landed on 31st December 2020, just even for a day, you didn't have any job, you didn't have any income. Do you still file returns? Yes, it is required from two perspectives. One, from the compliance, because 3 years down the line, when you are applying for citizenship, one of the questions that comes is, are you obligated to file taxes and have you filed taxes or not? So obviously you have to file taxes to be eligible for that. Second, to get certain benefits and credits that the government has allowed you as a new immigrant, you need to file the tax returns. Now, say for example, there's a federal benefit for child benefit. For each child, you get up to $6,000, or there is a GST HST credit. There are certain provinces which gives you climate action incentive, and again certain provinces which gives you trillium benefit for the rent that you are paying. So all of this benefits in the first year, you will get it if you fill up certain forms that are mentioned over here. In case in the second year, you will only get these benefits if your tax returns are filed. If you do not file the tax returns, you will stop getting these benefits. So to continue getting these benefits, it is mandatory to file those tax returns. Now, any point in time, you get the maximum of these benefits when your family income, both husband and wife's income put together, is somewhere around $28,000 or lower for that year. Then you get maximum benefits. Obviously, the government wanted to help and support the people who are into a lower tax brackets. Now, for those who for whom the family income increases from $28,000, this benefits get started reducing on a proportionate basis based on your income. In case if you cross $50,000 of income, then most of these benefits will go away. You will still get certain childcare benefit. In case of climate action incentive, this you get it based on your family size, irrespective of your income. So, say for example, if your family is you are four in your family, then you get up to $307. Now, this is based on Ontario. There are few provinces which are giving this, and each province has their own rates. So this is Ontario when you're a family of four, and you get this benefit. Certain tax planning and optimization techniques. Now, as I said, when you are a full-timer, Canada has created a very simplified tax system, and there are very few rooms that you can save and plan your taxes. But let me give a few ideas. In case of RRSP contributions, we normally carry forward RRSP contributions if they are not very tax beneficial in that year. So say, for example, you in 2020, you work only part-time and you were studying, or you were unemployed for the part of the year, and you made only $50,000 in that year. You contributed to $10,000 to RRSP. Now, you are into a 30% marginal tax bracket, say, for example, based on your income. So if I utilize the 10,000 RRSP in that year, you are only going to get a 30% benefit of it when I utilize this RRSP. In this scenario, I would recommend not to use that RRSP, but carry it forward in the next year when you're working for the full year and you have higher income. Now, say for example, in our example, in 2021, you are making full-time income of $100,000. You are at a 43% marginal tax bracket. In that case, we will utilize the $10,000, and instead of getting a 30% benefit, this year you are going to get 43% of benefit. So obviously, based on your tax slab, based on your income, we plan the RRSP. We do not utilize in the same year, and we can carry forward indefinitely without any issues, and you can use it into the future years. Tuition fees to be split with spouse. Say, for example, you are working and you are making income, but your spouse is not working but studying full time and has paid tuition fees. In that case, we are going to claim that tuition credits and split it with you or transfer it to the earning member so that they can get the benefit in that year itself. Contribute to RRSP to avoid jumping tax bracket. So obviously at certain tax slabs, when you jump the tax bracket, we contribute to the RRSP so that we avoid jumping the bracket. So say for example, at $97,000, the tax bracket, marginal tax bracket jumps from 37 to 43%. And if you have made $100,000, then I would recommend to contribute $3,000 to RRSP. So you are into a lower tax, marginal tax bracket. So again, this plan can be done after the year end or during the year with a discussion from your accountant. The reason I said after the year end is because RRSP can be contributed within 60 days, even after the year end. So till 1st of March of 2021, if you can contribute to RRSP based on your last year's income, you can take that deduction in the last year and can take the benefit. So you get 60 extra days after your year end where you can contribute to RRSP and take the benefit for the last year. So a wonderful tool. We are still in January and we have one more month. If you are into any such bracket, please plan your RRSP accordingly and start paying, contribute to RRSP so that you can save it for your last year. We file family return together, which is called a linked return. Now, both husband and wife, we file it together. And the primary reason is we can split the benefits, transfer the donations and tuition credits, or transfer the credits based on your income levels to the higher taxpayer so that we take the maximum benefit. And this is possible when we file together. Now, again, as I mentioned, you get up to $13,300 per taxpayer as tax-free income. So say, for example, if you are working and your spouse is not working, then her $13,000 tax-free of income, we can transfer it to you. So that means your $26,000 becomes tax-free. So, so you are getting double the benefits right now. And this is possible when we file linked returns together. Tax-free savings account, another wonderful tool to save for your tax returns. Now, under tax-free savings account, this does not save your taxes immediately, but any income that is generated under TFSA is totally tax-free. So say, for example, you invested into shares or mutual funds up to $10,000 in a tax-free savings account, and tomorrow the shares gets double and you take out the whole $20,000, then the 10,000 of capital gain is totally tax-free. You do not pay any taxes on any income or capital gain from the money that you have earned in TFSA. The only thing you need to remember is there are certain limits that you can contribute. Each taxpayer gets $6,000 every year right now into the TFSA per taxpayer. So between husband and wife, you get 6 and 6, $12,000. So say, for example, if you immigrated in 2020, you will still get $12,000 between both of you for 2020, and for 2021 you have already got another $12,000. So you right now you have $24,000 available. You can contribute and invest either in mutual funds or government bonds, or you can invest in shares yourself, and you can take the benefit of it. Just make sure you do not day trade into TFSA. TFSA is a tool where government wants you to save for future. If you're starting a day trading in TFSA, CRA will add it back to your income, and there are consequences for it. But if you are planning, if you're investing for a good amount of time, then it is allowed under TFSA. Again, there are no restrictions to take out the money. You can contribute and take it out when you have good appreciation without any issues or restrictions. RASP is a registered education savings plan wherein you can contribute to the education for your children. The way it works is government contributes 20% for whatever dollar you put it in this plan. So say, for example, you contributed $2,000 to the plan per year. The government is going to put another $400 from their side. So now your pool is $2,400. And again, this gets invested into different financial institutions, instruments. And when your child is of age where he goes for college or university, they can take it out this money and then can spend for their education tuition fees. The maximum government gives is $500. So it's good to contribute $2,500 per child so that you get $500 for government each year that you contribute, and then your kid gets benefit out of it. Again, there is no immediate tax benefit, but you are getting 20% of whatever you are investing right away from the government, up to maximum of $500. Split home buyer credits, donation political. As we mentioned, we file together so that we can split all of the credits and we can transfer to the person or the taxpayer who is into a higher tax bracket to get a maximum benefit. Certain COVID-19 benefits. Now, this is just a temporary slide because many of you have questions on CERB or the Canada Response Benefit, which is right now, how to apply, whether you are eligible and all of those stuff. Now, till September, government had a benefit called Canada Emergency Response Benefit or CERB. But after that, government started a plan called Canada Response Benefit. This is available to those who has a reduction in their weekly income by 50% due to the reasons because of COVID-19. So if you lost the job or if you, because of your specific self-employment, or employment, your number of hours or your income got reduced by 50%, then you can apply for this benefit. The conditions are you are present in Canada and you have earned $5,000 in last 12 months. You are not eligible for EI, or you are not quitted the job. So it's not an voluntarily quit of job, but you lost the job or you lost the work due to COVID. And you have to demonstrate that you are seeking for jobs. You're applying for the jobs and you're getting interviewed, but you are unable to find the job or find new business. The benefit amount is you get $1,000 for every 2 weeks period, and then you have to keep applying for every 2 weeks period. The period for which you can apply from starts from September, and it is extended till September of 2021. So if you fall into this category, then you can start applying for this benefits. Now, one question obviously you wonder is, how do we file taxes? Now, many of my friends, clients whom I consult, they also file themselves online. And trust me, there are a few online softwares available which are very user friendly. And if you know your credits, if you know your income, if you know what you're doing, you can file it yourself. If it is a simple T4 or an employment based or a zero income, then it's not a rocket science, to be honest. But in case, if you do not understand the credits, if you do not understand what to claim or what benefits are available to you under the federal and the provincial schemes, then I would request to please take a professional's help so that he can guide you properly based on your situation and claim the maximum benefits and the maximum refund for you. Now, in case we have created a very simple virtual system to do the tax filing. What we normally do is once you talk to us and give a background of your source of income and the tax system, we will share a checklist, an Excel checklist, which will probably take 15 minutes for you to fill it up. This gives us your name, address, scene, date of birth, family, what kind of income you have earned, all some basic information. You attach your T4 slips, you attach your credit supportings, like if you've done a donation or tuition or political contribution, you attach all of those slips and you email it to us. We go with 100% paperless filing, everything virtual and very seamless. We are working on a 3 days turnaround. So if you provide us the details, every details today within 3 business days, ideally, we will share you a draft and a declaration to e-sign it. Once you are good with your tax return, you e-sign that declaration, we will e-file it. And within 2 weeks, you will get a notice of assessment. In case if there's a refund, you will get a refund within 2 weeks. That is how it works. Again, the deadline to file is 30th April. Again, based on your information you have provided, in case if you're missing any information, obviously we'll call back to you and we will discuss your situation and then we will file your tax returns accordingly. So very seamless, paperless, virtual method, especially in the terms of COVID-19, where you do not have to waste your time sitting outside an accountant's office. And we will make this system very seamless for you. Now, many of the new immigrants, or for those who are working full-time, they are wondering to get into a contracting job. So we talked already about the full-time jobs. Now let's talk somewhere, where you are trying to start a business or you are an independent contractor. In case if you have an option to go through an independent contracting route and get a contract job, then we do corporations for you. In case if you are a business owner or if you're an entrepreneur and you wanted to start a business of your own or buy a business of your own, in that case, we help you do the incorporations and explain you how the incorporation will work. Now, trust me, there are a lot of benefits when you have a business or an independent contracting job. We claim all the business expenses against the business income to plan your income. So we plan your taxes accordingly. Now I've given a huge list of expenses that you can claim against your business income, and you can go through this, but trust me, most of your expenses that are related to business gets deducted from your income and you pay taxes only on the remaining amount. In Canada, if it is a Canadian corporation, the tax rate for corporates are just 12.2%, which is based in Ontario. Again, each province has a different tax rate. The 9% is federal tax rate for 2020, and the provincial tax rates depends on the province to province. As I mentioned, in Ontario, it is 3.2%. So the combined corporate taxes of the net profit that you're paying is 12.2%. So a wonderful incentive that the government has given, a very lower tax rate to encourage you to start a business of your own. In case if you are struggling or if you have an option to go through a full-time or contractor route, now there are various benefits for an independent contractor, because the risk that you are taking in getting into a business contractor versus a full-time job, we are able to claim various business-related expenses against income. On an average, I've seen there is a 10% savings of or paying of less taxes in a contract job, independent contractor versus a full-time job. With a full-time, as I mentioned, there are hardly any deductions or tax planning that we can do, and you will end up paying taxes based on your income. We can expense most of the spendings. There are certain tax planning things that we do under a contract on the business, where we defer the benefits, split the benefits or split the income to make you under the most optimal tax bracket. Both spouse can be director and can expense out of it. So various different tax planning techniques, methodology, strategies can be enrolled or implemented when you are a business versus a full-time. One question comes to me, hey Munil, I wanted to start up or buy a business. How does I get a loan? Now there is, again, the government is helping you into various terms. One, we saw from the tax perspective, the tax rate, very low rate. The second is called a Canada Small Business Financing, or CSBFL. Now, this is a government guaranteed loan that the government has enrolled so that to encourage new entrepreneurs to do a startup. Now, the way it works is, say, for example, if you wanted to buy a running restaurant, or buy a running grocery store, under this plan, each bank will be able to finance you 90% of the equipment or the leasehold improvements, and you only pay 10% of it. Now, say, for example, you're buying a grocery store for $200,000. We will get a valuation of the equipments, the leasehold, and everything within that store. Now, say, for example, the valuation comes to $200,000 or more. In that case, we get 90% of that $200,000 financed from the bank. So you are only going to put 10% from your pocket. Under CSBFL, the maximum we can go is $350,000 for any kind of equipments or any kind of leasehold improvements, and up to $1 million if it is a real estate property. Now, in the given example, if you're buying the grocery store along with the real estate, and the real estate is $500,000, we get 90% of that funded from the bank under this plan. The requirements are, of course, we have to prepare a business plan and do the projections, which I will help you to do all of those. And we have connections with the bank. So we will propose to the bank based on the plans and the projections, we'll get a finance for you. There are certain COVID-19 related benefits. So if you are already an incorporated business, or you're running a business in the last year and you have suffered because of the COVID-19, certain government benefits that they have declared are, you get up to CEBA loan up to $60,000. There is a rent subsidy and the wage subsidy given to you. A regional relief program in Ontario and other provinces have declared or announced their grants. So in Ontario, it is up to $20,000. Now, if you are falling into such category and you wanted some help to understand how much, how much you are eligible for, feel free to touch base with us, and then we can always help you explain how and prepare those documentations to make you eligible for this benefits. How to choose an accountant? A very important question. See, basically, any kind of professional partner, a lawyer, a doctor, an accountant, financial advisor, these are very important for you in your life to make a very thoughtful decision, so that these partners can help understand, analyze your situation, and then help you make those decisions. Now, normally, I prefer to go with a designated chartered accountant, because with the designation comes with a lot of detailed studies and clearing those exams. So a designated CPA is always preferable. You take reviews from your friends, relatives, or you can always Google reviews. Now I've given an example of our reviews. We have 200 plus 5-star reviews. You can go through this reviews, reading what clients are talking about as those accountant, so that you can understand whether that accountant is the right fit for you or not. Knowledgeable, of course, when you pick up a call and ask them a couple of questions, and based on their answers, you will be able to understand whether he has that knowledge to help you in your situation or not. Years of experience, obviously, we wanted to go with an accountant who is at least 2 to 3 years into practice, so that he has done variety of different tax returns and have seen variety of situations and can help you out. Approachable is one of the important aspects. Obviously, you should not go with to an accountant whom you email and then do a follow-up after a week and then another follow-up and then just keep following up and you don't get the answers too. So an accountant should be approachable. You are into an urgent situation or a difficult situation, and he's always available to help you out. Now, these are certain features I would normally recommend to go through before choosing your accountant. With kind of experience, as I mentioned, like, if an accountant has done various type of different returns, he has gone through various scenarios and he can help you based on your situation. Now, for us, we are working right now with 400 plus businesses, and we have done in the last year we have done 1200 plus personal tax returns. This year we are targeting 1500 plus personal tax returns. So with so many with 1,000 plus personal tax returns, we have seen lot of different situations and different varieties of financial aspects. So we can always help you out, and you can leverage from our experiences. Just a brief of our team right now. As I mentioned earlier, Monil, so myself and Hita, we are equally qualified and directors of the corporation. We have Himanshu and Abhi, who are a full-time employees and chartered accountant from India. Abhi is chartered CA Inter from India, and they help us preparing the tax returns and doing the bookkeeping for our clients. But we ourselves are involved fully into the consulting. So you will talk to us, and we will help you explain all of those scenarios and do the consulting for you. A little bit brief about our services. We do personal returns and corporate returns in case if you want to incorporate, whether it's a contractor job, independent contractor, or a business, we can do corporations. We do accounting and bookkeeping. If you are a startup and you wanted to plan and set up the books, we will help you to do the initial setups. If you wanted to buy a franchise business or you wanted to buy an existing business, then we can help you evaluate and do the due diligence so that you understand what are your options and whether you're making a good decision or not. In case if you wanted to get finance, we will help you do the business loans, plans, and projections. In case of CRA audits or CRA reviews, we will help you explain all the situations and we can respond to CRA on your behalf and help you out of those audits. You can always connect with us on LinkedIn. We have a YouTube channel on which we are doing various videos, and you can always subscribe to our channel. CanPR, of course, is a wonderful platform that keeps on doing such events, and you can subscribe to CanPR and follow the CanPR. They have a Facebook page, they have a LinkedIn, as well as the YouTube channel. So you can subscribe to them, and any such events that I'm doing through CanPR because I've partnered with them, you can always take the benefit of that as well. Certain things that you can follow us and get connected with us. And again, thank you so much for watching this videos. Hope there was a lot of information that you can take benefit of it. I mentioned my contact information. You can always touch base with CanPR, Arman and Maz. Of course, they are wonderful to help you out to get touch base with us as well. I would also like to thank CanPR for arranging this wonderful session. The activities that they are doing for new residents or new immigrants, or for those who are planning to come to Canada, by providing them different various aspects of life in Canada, because we are already here, and you wanted to know how it looks, how to plan things in advance, so that all your options available, and this can help you make a very thoughtful decision. So thank you so much for watching this video. What I'll do is I'll pass it on to Arman just for a few minutes. in case if he has a feedback or something he wanted to say. And then I will go back to the question answers. Again, as I mentioned, please type the questions. We have 30 minutes from now to answer all of your questions. I will try to answer most of them based on the generic nature of the question. If it is very specific, you can always touch base with me and we can help you answer the questions. Considering the timing limitations, we will try to answer as many as possible. So over to you, Arman, and then once I'll take it over for the question answers. Thank you so much again for watching the video.
Thank you so much, Monil, for sharing these details with us. And like I myself do understand that it's a lot of information that we would compress in an hour, and there are going to be a lot of questions that we would need additional details about. So feel free. I am getting a lot of questions on the YouTube chat as well as offline. So we can definitely take these questions one by one now during the question answer session. Again, like I mentioned before, and as Monil mentioned, there are going to be questions which would be like personal in nature, and there would be either ones that would need a longer description or a detailed answer. So for that, we do have a form in the link of the YouTube video description. Feel free to just type in your question through that form, and then we'll get back to you immediately with a response. And yeah, just stay in touch and with the app, and we will be having different sessions on different topics: taxation, immigration, finding or buying a house, and different such day-to-day things that we would want information on. So stay in touch. You will get a notification whenever there is any new session happening or any new updates. So yeah, just keep sending your questions on the YouTube channel, and then Monil will help answer most of these questions. Again, some of them might be very personal or would need a very detailed answer, so we might have to pass on those questions for now, but we can definitely take them offline through the form. So thank you, everyone, and back to you, Monil, for the questions.
Thank you so much, Arman. So let's start reading the questions. So we have a question from Dipanshu says, "Hi Monil, what if tax file deadline is passed and didn't file the taxes? Will there be any penalty while filing the tax next year?" Dipanshu, so the penalties are levied based on the taxes that are due to the government. So in case if there is any outstanding taxes, like if you have earned a taxable income and based on the tax return, if there are any taxes that are due, obviously there is a minimum of 5% penalty for missing the deadline, and then there is interest because of that outstanding amount. In case your amount, you have not earned a taxable income and or there are no taxes due, or in case if you have worked as a full-timer and your employer has deducted more taxes than what it should be, and you are claiming a refund, in that case you are not looking at any refund or any interest. So again, you can file for as many as 10 years past, and you can get to up to the speed, but I would recommend to file the taxes immediately so that you do not get any notices from the government. Right one is asking, I can't watch the video right now. Okay. Yeah, so I believe the video would be available, if I'm, Arman, just correct me, for 24 hours, and you can always stream it on the YouTube. Arman, Kantia is also going to share the form where you can ask the questions in case if you're unable to ask it right now, and we'll try to respond as much as we can. George is asking,
yeah, you're right, Monil. So this video link will be available for the next 24 hours, and this is just to make sure that we have our audience in different time zones. So a lot of them weren't able to make it for today's session, and they want to watch it offline. So we'll have the live session up for the next 24 hours, so you can just watch it anytime during that. And in case you even happen to miss that, we will be having regular sessions soon, so we will have a follow-up even in case you happen to miss this one. So yeah, back to you, Monil.
sure. So George is asking, how about laptop and cell phone bills for home office expenses? George, so capital asset, as the government has clearly mentioned, is not eligible for home office, and you cannot expense that out. Pablo is asking, what about dividends paid because of stock investment within your TFSA? A very good question, Pablo. So, see, if any dividend is paid from the stocks that you have invested within Canada, it is totally tax free. So any kind of interest income, dividend income, capital gains is totally tax free. The only issue happens when you have invested in the stocks outside Canada. So say, for example, you bought stocks, US stocks, and you invested there. Now, based on the treaty and based on the terms, US, when they issue, the US company, when they issue dividends, they are going to withhold taxes and only pay you the net amount. Under this situation, obviously the taxes are deducted and you cannot claim it back from whatever the sources is. And that's one setback of investing in US, getting taxes being lost in that transition. In case if you're invested in US stocks under RRSP, then the US government allows RRSP as a tax-free event. And in that case, you do not have to pay taxes on the dividend when you receive under RRSP. Panda is asking, dividends received on investments in TFS account is not taxable. Okay, he answered. So again, it's not a complete answer. It depends on from where you are getting the dividends from. George is asking, please email us the Excel checklist and video recording of this or YouTube for review. So George, what I can do is, as Arman mentioned, this video is available for 24 hours. I have created, so ScanPR is going to create a regular periodical events for the taxes and other things that you can subscribe and get updated. But at the same time, I have a YouTube channel and I've created a small video based on the tax system. You can always watch that video. If you have any questions, you can always touch base with us. Sarin is mentioning, can first-time tax filers do it online or does it have to be paper-based? So good question, Sarin. The first-timers cannot do online e-filing. They have to mandatorily do a paper filing. But when you contact a tax preparer or a tax accountant like me, like us, then we have an e-file number and we can do e-filing, which is very simple for you to manage it. Paper filing is going to take a hell lot of time and it is more it's just time consuming, versus e-filing is just one click and you exactly know the filing is done. You get the e-file confirmation right away. So first timers, if you're doing yourself through paper copy, through tax preparers, you can do online. Ajay is asking, last year I tried Simple Tax. Now it's well simple. It's kind of free and simple to file. As I mentioned, Ajay, there are various free softwares available. If you are a T4 employment basis, it's not rocket science, hardly any deductions or credits, but you need to know what you are doing. You need to make sure you're claiming it properly. The tuition credits being transferred, child daycare expenses or donation credits being put in properly. If in case if your foreign income, you are claiming the foreign tax credits. If you have investment income, then you're claiming the rental income from that investment and proper expenses are being claimed against it. So everything depends on what your tax situation is. But a simple tax return is not it's nothing is rocket science. If you do your research, you have a good time and you understand your finances, you can do it. Now, tax returns can be filed ranging from $30 to $100. You need to make sure is your time worthwhile to invest, or you can just go to a tax prepper and do it properly in one go. Sorry, I missed some questions. So first timers, we can do it online. Okay. So Chaitanya, sorry, I missed some questions, so let me go there. Chaitanya is asking, I'm only just wanted to know more about home office expenses for self-employed. So Chaitanya, if you are a self-employed and you're using your home office for doing your business, there is a formula where you can claim your home office. Now, in case if you're rented, your total rent plus utilities plus maintenance plus internet and any kind of small repairs that you've done to your home office, you can claim as your home office. Now, you have not the complete expense can be claimed. There is a proportion Because you are going to pay the rent for your whole house, then you have to calculate how much your dedicated office space is divided by your total home space. So in the given example that we have mentioned, if you're using your den or a small room, and if your small room is 200 square feet divided by 1,000 square feet of your total house, then 20% of your total home office expense can be claimed as home office. Now, if you are a self-employed, and in case alternatively, if you are owing a house and not renting it, then what you can add under home office expenses is your interest that you pay under the mortgage, plus the property taxes and utilities and any kind of maintenance becomes your total home office expense. And similarly, you have to calculate a percentage of your dedicated office by your total home space, and that percentage you can claim as home office. Now, please note, I have mentioned here interest on mortgages. This is allowed only to business people or only to self-employed people. If you are salaried, then that is not allowed under home office expense. So there is a difference over there. Let's go to next question. Hamad is asking, I filed my tax return for 2019, but forgot to declare my assets back home worth $100,000. Should we file correction to declare 2020? 2019 was my first return when I landed. So Hamad, yes, you have to do a T1 adjustment to notify the government to that effect. That means you have to you do not have to refile the whole return, but we provide the T1 adjustment to that effect so that we declare it properly to the government. And in 2019, 2020 tax returns, we will again rectify when we file it, or we will file it in a correct way so that you do not have to refile it. Sarin is asking, if I start a social media company, how can I go about it with regards to getting incorporate? Of course, Sarin. So if you are, if you wanted to start a business, you can always get an incorporation and then start earning the income based on that corporation. Certain benefits of being incorporated is you can decide how much income you wanted to transfer it to personally based on your income levels. In case if you wanted to split the income based on spouse's contribution, or you wanted to defer it into the future year, that is always possible. Second benefit is obviously with a private corporation, it's a limited liability. So if something goes wrong and if you're sued, then only the assets of the company get sued and you're personally not liable for it. So that's another benefit of getting incorporation. One thing, Sarin, you need to make sure is you need to see how much income or what is the focus of your corporation. Is it a long term versus a one time small job and all of those things? Because obviously, incorporation comes at a cost. Opening up a corporation plus filing of that in the first year ranges from $1,000 to $1,500, depending on your complexities and the work involved and the time spent. So make sure you're making your plans are huge or you're making good enough income to justify the cost for that incorporation. You can always touch base with us to understand, and we can do a deeper dive based on your situation. Anand is asking, when would I get business loan after landing there, and at what rate? How much would be the down payment in Ontario? As I mentioned, Anand, so if you're going for a business loan, and if under the CSBFL government plan, you can get up to $350,000 for equipments. You can get up to $1 million for a commercial property, and you can get 90% being financed by the bank. So you just have to put 10%. But there are various rules about it. Your background, your business, the down payment, the assets that you have, and all of those stuff that needs to be taken care of while we are preparing your business plan. And we have done various plans ranging from getting loans from ranging from $100,000 to $1.5 million. So we can always help you out based on your requirements. Again, you do not have to, if you are on PR, there's no requirement that you have to stay in Canada or you have to work for some time to get a business plan based on your individual situation and the strong that strongness that we put in the business plan. You will be able to get the loan. Interest rate differs. Ideally, it ranges from 3% to 5% based on the riskiness of the business and the available rates. But right now, it is somewhere around 4.25%. So it's a prime plus certain percentages depending on which bank we are applying. Joel is asking, can we continue to invest in stocks or mutual funds in India or any other country? Any tax implications? Again, Joel, you can continue, of course, doing investments globally. As I mentioned, any income that you make globally is totally taxable in Canada. So if you have any income from outside Canada, you still have to declare that as foreign income, and you'll have to pay taxes. In case if you're paying taxes in foreign country, then we claim foreign tax credits for it. Angela is asking, may you please clarify income tax splitting? Is an employed spouse able to port part his earnings to an unemployed spouse? If so, how? So Angela, tax split is not a simple rule. There are certain rules about it, and it is a very complicated situation. If the government or CRA finds that it was an unreasonable split and it was only done to save or to evade taxes, the income that you split with your spouse gets taxed at the highest marginal tax slab of 53%. So you have to be very careful when you are doing this stuff. And I would recommend to take a financial advisor or accountant's advice, considering your situation. If you are able to document the business requirements, if you are able to prove that the business required or there was some contribution from your spouse, then you are able to split it. So again, if you have any questions, feel free to reach out and we can always work that out for you. So let's go to the next question. So Pablo saying, thanks a lot, Monil, very clear. Thank you so much, Pablo, for your feedback. We always like the feedback that encourages us, and there are times where we have to improve our services as well. So any kind of feedback is always available. Edefe is asking, how much is your fees for filing taxes for individual and business? Now, Edefe, it's not a straight answer. It depends on the situation and the complexities of the tax return. For a simple T4 based return, our fee starts from $54 plus HST, which is $60, including HST. Now, depending on the complexities, the tax forms that we have to file, in case if you're doing investments or if there's a rental property or capital gains from sale of property, then based on timings, we charge different fees. For a corporation, the fee ranges from starts from $400 to $2,500, again based on the situation and the complexity of the business. Whether there are employees under the payroll, how much income you have made, how much tax planning or timings are involved. So my fees are based on the time I spent on a file, and it is indifferent at how much an incorporation has made. So again, you can always touch base with us, and we can explain you based on your situation, and based on the time being spent, we will charge you accordingly. Chaitanya is saying, thanks so much. Thank you so much, Chaitanya, for your feedback. George is saying, you said first time tax filers cannot file online by themselves. Why not? Please ask. George, that's the CRA guidelines. And because your profile is not there with CRA. When you landed in Canada, CRA does not have your SIN number or your profile, or they don't know that you have landed already in Canada. So there is no file that is being created by CRA. That is why CRA do not allow you to file online, and they wanted you to do the paper filing. With the e-filers, because CRA has our details with them, so in case if they wanted to reach out for any queries, they have someone responsible for it, and that is why it is allowed. And e-filer or a registered CRA agent can do the e-filing for themselves. George is asking, insurance agents or brokers earning commission only? Are there business owners or independent contractors? So George, if you're earning commission and if you're getting a T4A slip for that commission, then you are a self-employed, and you can be considered as independent contractors based on the agreement that has been signed between you and your or your agency. Now we have certain mortgage agents. We have certain insurance agents who get a T4 slip and they earn commission. In that case, they are a full-time getting a commission employed. There are certain agents or mortgage agents that get a T4A slip. The T4A slip says that you are earning commission based on your services as a self-employed, and they did not deduct any taxes or any CPP, and it is your responsibility. So depending on what T slip you are getting and depending on what your contract is with your employer. Dipanshu is asking, I landed in Canada in 2019 and I have a FD of X amount and I renewed it in 2020 without sending any money to Canada. Will the interest earn on this? As I said, Dipanshu, any income that you earn after landing in Canada is totally taxable as global income in Canada. So any interest you earn for the proportion of the months or the years that you earned after landing becomes taxable in Canada. Chaitanya is asking, for self-employed, is it mandatory to contribute to CPP and EI? Chaitanya, yes, it is mandatory in case of CPP, and not only mandatory, but you pay double of that CPP. So in case if you are a full-time employee, you pay 5.25%, which is a 2020 rate. In case of a self-employed, you pay double of that because you pay from employee as well as employer share. So you pay 10.5% of CPP. In case of EI, there are certain rules. It's not mandatory, but it's optional. If you wanted to go for EI to take the benefits of paternity or maternity, or to claim disability credits in future, there is a form which you have to sign and you can optionally go for EI. Now, please remember, if you are a self-employed and you optionally sign for EI, then you do not, and in case if you lose a contract or you lose a business, you do not get unemployment benefits. Those are only for full-time, not for self-employed. Manibaz is asking, if I buy property outside Canada, would I need to report to CRN? Would the profit be taxed? I already answered that, Manibaz. So if the property's market value is more than $100,000, yes, you have to disclose or declare that property to Canada. Any income, whether it's rental or if it's capital gain on the sale of the property, you have to pay taxes. And in Canada, any taxes that you pay in the countries outside Canada, you will get foreign tax credits for it. Angela is saying, thank you. You are very extremely knowledgeable in your field. Thank you so much, Angela. Obviously, if you want any services, we are here to help you. And again, thanks again for encouraging us to keep on doing many more sessions like this. George is saying, how much do you charge for seniors with RRIF simple tax? Estimate is fine. George, if these are not a lot of tax slips and we are able to do online filing, and there are no other investment properties, the fees would range from $60 to $100 based on the number of T slips and tax the time spent. And again, but just to let you know, we are working with various senior clients, but we are doing everything online. So if you're comfortable doing online, we will be more than happy to onboard you. We just don't do paper filing, or we don't have in-person meetings, especially with the COVID lockdown. Anyhow, we are not doing in-person meetings. So feel free to reach out to us in case if you wanted us to help you out. We are always there. Chaitanya is asking, how can I contact you? I have some specific situation which I think need guidance. So Chaitanya, let me tell you certain things. A professional's time is what we sell, and along with our services, right? We have limited time, and we do various free webinars just to educate clients and help you understand the taxes. Any consulting that we do is taxable. Is chargeable, and based on the time that you need, based on the complexities. We will give you a slot of 15 minutes or 30 minutes or an hour based on the time you want, and we will charge you based on that time. So my contact information was mentioned on the slides. You can always go back and there's email ID or the phone number. You can message me or you can email me, and based on the requirement, we'll set up a slot, and then based on that, we can set up a time with you and we can help you resolve your questions. Dipanshu is asking, okay, thanks for clarifying. What is the best way to reach you? Again, email or phone. I would recommend an email to reach out in the first time, so that, see, with the phone calls, now, I normally do not pick up the phone calls when I'm doing a tax return, and with the tax season in place, we are too busy doing the tax return. So it comes as a distraction. And but you can always email it to us. We have a policy to respond at least in 2 business days. So you will get a response from us or a phone call from us. So leave a message with a query. Please leave a message saying that you got our contact information from CanPR. That is how at least I will be able to track that this was the session you attended, and that is how we can build up that relation. Leave your contact information and I will contact back to you based on the urgency of the situation, and we can always work together. That's all for the question answers, and I think we are good with the timing session also. So thank you again so much for asking all these wonderful questions. Hope this has helped you to understand the tax system, to help you to save some dollars this tax season. Feel free to reach out in case if you want any kind of consulting, if you wanted us to help you file your tax returns, or if you're planning to buy a business, we can always help you make the right decision given your situation, right? Arman is the CanPR is going to share the questionnaire to you. We please make sure it will take at least a week from now to respond to those questions based on the question answers we are getting. Uh, Again, you can feel free to reach out on our email or phone call if you have any questions. Please do mention you're contacting us through CanPR so that we can create a profile accordingly. Lastly, I would again thanks CanPR for doing this wonderful session that has helped to a bigger community. It works from me from in a way to giving back to the community. Obviously, we are there to help you out. And again, thank you so much for having this session. Hope you have enjoyed and learned certain things from this. Have a wonderful remaining weekend and see you around the tax season. So happy tax season to you. Over to you, Arman.
All right. Thank you so much, Monel, for this session. It was really informative, and I'm really pleased to see the comments on YouTube and the other comments that people are sending to us. They really liked the session and found it really informational. And yeah, I mean, thanks again, and I definitely hope to see you again very soon. We can have another session in the coming weeks, whenever suitable for you. But again, thank you so much, and it's a pleasure for us to be also able to give back to the same community that helped us. When we were new to Canada, we had the same questions. We would ask different people around, and um, so it really, it's just a way of giving back, and I'm just pleased to be able to do something like this. So thank you again, and everyone have a great weekend. Do send us your feedback, on like how was the session. Do you think we could have it differently? If there are certain different topics that you would want us to have more sessions on, either be specific to finances, taxes, or even other topics that you would like to hear on. We plan to have another session, soon, related to resumes, job buildings, and we will be having new sessions. So definitely stay in touch, and send us your feedback, send us your updates, and we will try our best to have them included in our coming topics. So again, thank you. Have a great weekend, and bye for now. Bye, everyone. Thanks.